In 2 seconds. You're live.
3, 2, 1. Yo, 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 yo. What's up? And Dave said he wants to hop on too. Am I live? How do I know if I'm live? Good morning, good morning, good morning. There you go. Scotty. Hey, Scotty, what's up? Welcome, welcome. I'm going to pass to you in a little bit, Scotty, to do some text if you want technicals. But anyway, good morning, Bob. What's up? What's up? What's up? Market isn't alive. Yeah, market's sort of not. It's a non-event right now. Curiously enough, good morning, everyone. It's me, Einstein of Wall Street, Peter Tuchman. Welcome. It is Friday, closing out the first week of October, the beginning of Q4. We closed out Q3. No seasonality. Market on fire. 31 record closes in 2025. The market has been handed every possible thing to mess with it, to empower it. That's why we've been up, up, up. Nothing is knocking this market off its pedestal, even a government shutdown. Now, as the government shuts down and it stays there the longer, you are going to have impact. But right now, we're not seeing a lot of that, okay? Obviously, the lifeblood of the market are earnings, are guidance. Those have been super strong, so that's underneath the market. What's that say here? YouTube, there's a lot of tappy tap going on. Bob W., what's up? So, ladies and gentlemen, it is Friday. Today, Dave's in transit. I am going to do the YouTube live every Monday, every Friday, trading the opening live on Wall Street Global.
What's up, Pete?
Good morning. Who's this?
This is David Green.
Well,
We're both in the car.
We're both in the car. You know, we are full service brokers.
Ladies and gentlemen, I am on my way to New Jersey for my grandson's christening. I'll be out today and Monday. It is Friday. It has been a very, very good week of trading. We always take it easy on Friday. We're done trading by, 11 o'clock or 11:30. If you've had a decent week, this is a day to just relax and sit back, take it easy. Market had really, really good, as Pete's talking about now. We will be, let's do this, Pete, because I'm not here today. Let's post my email if someone can, and we'll invite everybody into the trading room next week to hang out with us for free for an entire week. All right, let's post that up there, dgreen927@yahoo.com. Post that for everybody. Please, everybody, shoot me an email, and I will get you in the trading room next week for the entire week, and we'll talk futures. We'll talk whatever you guys want about, but we'll give you a ton of knowledge. We'll invite you to our slow markets on Tuesdays and Thursday nights with Scotty. Pete, Scotty's here. If anything anybody has anything technical to add, all right, he can answer some questions for everybody.
Beautiful.
So we'll pick it up next week, guys and girls. I will see you all there. And Roman, get my email up there, and we'll get everybody into the trading room next week. Listen to Peter. Take it easy today. Love you guys. I will see you all on Monday.
Super. Thanks, David. All righty, guys. Listen. So every Monday, every Friday, Wall Street Global Trading Academy live YouTube. Me and David Green and Scotty and the team trading the opening bell. On Thursdays, we're trading the opening bell with Benzinga. All of you who are new, obviously, the most intimidating time is in the morning when you first sit down at your computer. You don't know what to do, what stocks to look at, how to understand the economic data that came in. Why is the market up or down? Just to give you a little recap of what's going on this morning, futures are pointing towards a higher open. Dow looks up 100 points, NASDAQ up 40, S&P looking up 10. That's reasonable for a Friday with a market with a government shutdown. Oil's quiet, nat gas is quiet, gold's trading at 3,861. Treasury yield is a little bit lower, Bitcoin towards $120,000, the VIX at 1640. That's a little bit elevated. When markets trade at record highs for extended periods of time, you tend to see, look, the VIX is the fear index. When markets go down, that usually goes up. However, if that's not engaging, when markets stay overinflated and sort of frothy without a real explanation, people start fearing that, you know what, it can't go up forever. And that's why the VIX will sort of step up a little bit. That's kind of, there's probably a, okay. Anyway, let's go over what else is going on here. So David said they had a great trading week. Look, the bottom line is, as traders, we're looking for volatility. We are looking. What's up, Dave? Dave's in a car. I'm in a car. I'm on the west side. That's pretty funny. I'm going to take a picture of that. Anyway, you know what? That just shows David and my commitment to what we do. No matter where we are, we will hop in a car just to give you guys some content. At the end of the day, listen, if any of you, give me a one, if any of you are near Boca Raton on October 21st, me, David Green, BK Traders, Kathy, and Boris, we're going to be live at the Marriott for a whole day, trading the market live, talking markets, volatility, talking futures, giving out some Apex stuff. So if anybody's in Boca, there's a link in the bio, link on the website to buy for the day. There's a $97 deal at $197. There's an upsell if you really want to do the whole gambit where you get to like take a vacation with Dave in the Caribbean. It's all good. But anyway, so join us. We're trying to give you as much content for free as we can and as much content that will make you money. We're kind of giving you motivation, inspiration, access, and funding. That's what Apex does. If you go to the Wall Street Global Trading Academy or my Einstein of Wall Street, there's a link in my bio that will take you directly to Apex. In Apex, you can open up an account for as little as $32. Use code WSGTA. That will give you the cheapest code that Apex has. Just be aware, the first month is free. No, sorry. Stop that. Those are the courses we're giving away. Forget that whole thing. Let's keep going. Go to Apex for $33. You can open up an account. It's amazing. Never before in history could you literally do that. It needed 25 grand to open up an account and not be sort of knocked off by pattern day trading regulations. Apparently, that's also starting to change too. But all the barriers to entry are down. Apex gives you the option, accessibility, and funding to go out there and open up an account. Then you got Wall Street Global Trading Academy, which gives you the education with David, with Scotty, with Kevin, with Ken, all of us. If you want, we're coming out with a new course. I'm $299 or something, a 7-hour futures course, very Apex centric, okay, that will give you the direct line to learn how to trade the futures market. Then you open an account with Apex and you're trading. You can get paid to trade. Anyway, we are closing out the first week of Q4. Okay, we are in the midst of a interest rate cutting cycle, right? We know that the last Fed meeting, we did get a 25 basis point cut. My gut was we should have gotten a little bit of a more cut, but I'm not the Fed chairman, so it's probably a good thing in general. But the bottom line is, historically, when you're in an interest rate cutting cycle and it lasts for a year, which is what this is projected to, historically, the market has been up at least 16%. So every time this happened before, and we were in an interest rate cutting cycle for 12 months, the market at the end of those 12 months was up 16%. Well, that's kind of good news, right? Markets trade on historic data. So, if anybody needs, some vote of confidence that the market's going in that direction, that's a little bit of historic data that will help you that. At the end of the day, we're looking for volatility. We're looking to be able, we're looking for good trades every day. You cannot cherry pick the trades. I'm sure Scotty and David will tell you that. When a trade sets up, that means that the technical analysis tells you. We use moving averages. We use pivot points. We use RSI. We use double top, double bottom. Go watch the last live masterclass we did. It's probably on our website. We talk about David's 5 secrets of successful day trading. And you know what? I'm going to throw that out there. I, unfortunately, am in a car. I don't have a computer in front of you, and David's not here to go over opening trades. Market's not open yet. We're looking at a higher opening, but just for all of you, what's exciting about trading the opening bell with David and Scotty and the guys live is that for new traders, knowing what to do in the morning when you sit down at your computer, it's probably the most intimidating thing you can do. You don't know what stocks to attack. You don't know really how to understand and assimilate the economic data. You're sitting there sort of like frozen. What do I do here? That's why we're doing that, right? Having someone to hold your hand trading the opening bell is amazing, and there's nobody better than David and the team. So all that being said, the secrets of successful day trading, that this is like Dave's 5 commandments of love, are for every day trader out there, right? Day trading, making small bits of money every hour, every day, every week, every month. So you're green at the end of the year. That's the bottom line. We are scalpers. We're here to hit singles and doubles. However, there are rules of discipline and consistency that make this work. There are successful traders. There are unsuccessful traders. I have never seen a time in the 137 years I've been trading this friggin' market as many people who are doing this successfully. Now, granted, half the people on the internet who are posting pictures, lying on the back of a Bugatti with sacks of $10,000 are probably full of shit. Excuse my language. However, there are an amazing group of young traders and middle-aged and older traders, the name of the German for anyway, who are really doing this and doing it well, right? And that's why, some of the people, the influencers that we've met through Apex also are doing it well. And we have so many students who are kicking butt, and we're really proud of that. Anyway, successful tips on day trading the market. Number one, first of all, is have a goal in mind of how much you want to make in your day. When you hit your goal, if you're a 100-share trader, $100, 500-share trader, $500. Make a reasonable, right, demand on yourself of how much you want to make when you hit your goal. Turn the machine off. Don't trade to hit it, but when you hit it, stop. Obviously, we're trying to prevent over trading, right? If you get to a level and you think you got diamond hands and you keep over trading, the worst feeling in the world is at noon to be up $500. You think you're doing great. By the end of the day, you're down 2,000. That's what we want to prevent. So don't overtrade. Have a goal, hit the goal, turn the machine off. Every order you enter has to have a stop order on it. Do not live in this espionage, conspiracy theory idea that market makers are out to get you and they know your stop orders are there and they screw you. That is an erroneous bunch of BS. Okay, Dave was a market maker. I work with him all day long. They're way too busy to worry about your order. Not that your order isn't significant, but that's not what they're worried about. They're being graded on their P&L. Your stop order is not going to impact their lives. They're not going to mess with you. They're not out here to hurt you. Have a stop order on every order. I buy 100 shares of whatever. Just hypothetically, at $100, I have a stop order in down the average daily range, or 1% of the price of the stock or the index, whatever it may be. Okay. If I get stopped out, I lost $50, I lost $100, I move on to the next trade. If it starts to go up, we start to take profits immediately. This is David's strategy, tried and true. It's been working for many, many years, right? The worst thing you want to do is buy something at $100, and these are hypothetical numbers, right? It goes up to, you buy something at $50, it goes to 53. You think it's going to the moon. If you don't make a sale, and the next thing you know, it's trading at 48. The first thing you're going to do is try and buy more and average into the trade. Have a plan with how much you want to make in your day. When you hit your goal, turn the machine off. Have a stop order on every trade, and if it's approaching your stop order and the trade's going against you, let yourself get stopped out. Do not move your stop order. Rather take a hit. People don't like to accept losses. Okay? What ends up happening is they'll actually make themselves lose more than they would have initially lost, right? If you have a stop order down $50 or $100 and it's going that way, let yourself get stopped out, move on to the next trade. Do not move it. People do it over time and time again. Okay? Number 3 is never turn a winning trade into a losing trade. If you're up on it, start to take a profit. Move your stop up to break even. Imagine this. I buy something, XYZ, at $50. I have a stop order in at 49. It goes against me. I get stopped out. I move on to the next trade. It goes to 50 and a half, let's say. I sell half my position. I move my stop order up to $50. I just made 50 cents, and now I cannot lose money on the trade because my stop order is at break even. Nothing better to build the confidence of a day trader, having made a little money and be protected on the downside. I cannot lose money on the trade. That is the greatest feeling in the world. Next, it goes to 51. Sell 25% more of my position. Move my stop order to lock in a $0.50 profit. And as it goes up, use a trailing stop. That's discipline, consistency of a good trader. Okay? Somebody who is not is going to just buy the stock, not have a stop order, watch it go up $2, not make a sale, watch it go down and keep averaging in. You can turn a winning trade into a losing trade. Turn a winning day into a losing day. As I said, when you hit your goal, turn the machine off. The worst thing you can do is be up $500 at noon, just short of your target number, or when you get to your target, you think you got diamond hands, you're having a great day, you're like a wizard, and you don't stop, and you turn a $500 winner into a $1,000 loss. We don't want that for you. Know when to stop trading when you're making money. Know when to stop trading when you're losing money. If you're in there and you have 3 max loss trades, you're in a trade, you lose 50, 50, 50. Go to the beach, have a Coca Loco, forget it. Stop trading. You're not a loser. You're not a bad trader. You're having a bad day. You'll come back from a bad day. You'll come back from a bad week. The alternative is revenge trading. I got to get it back, got to get it back. You will turn what would have been a $200 loss into a $1,000 loss. Once again, we don't want that for you. These are the simplest rules that if you listen to them, and these are Dave's rules, if you listen to them, you will be a 50% better trader right off the bat. That's the bottom line. The alternative is not have a stop order, averaging into a trade, not having a goal, not taking a profit when you can, but when you have to, don't know when to stop when you're losing money, revenge trading. These are the two. That's the paradox here. Be a successful trader or an unsuccessful trader. I always use the analogy of a gambler, a guy who goes to Vegas, right? There's two different kinds of people who go to Vegas, one with a plan, one with no plan. Okay. There's the guy with the plan, goes to Vegas, $1,000. He makes a deal with himself. If I make 1,000, I'm shutting down the game. I'm going to watch a show and go to Ruth Chris for a steak with my family and go to bed. That is a successful gambler. An unsuccessful gambler with no plan goes there with the same $1,000, is up 1,000, is up 3,000. He thinks he's got diamond hands. He starts going all in. Suddenly, he's not up 3,000. He's only up 2,000, 1,000. Suddenly, he's got to go to the ATM 3 times. He's out on the corner smoking Lucky Strikes and drinking Hennessy, and he can't afford his rent next week. These are the two different kinds of traders and gamblers. Anyway, it's Friday. You know what? At the end of the day, we closed out the quarter spectacularly. There's no seasonality around September, and I don't think there'll be seasonality around October. Everybody needs to understand, though, seasonality has a couple of different components to it. October, historically, has been a month where we had the crash of 87. I was there for that. I was a clerk. I believe Dave was there as well, okay? That was, in my opinion, in my career, probably one of the worst days. I think the market lost 39% of its total value. The Dow was trading thousands of points lower than it is today, right? But that's really still got a bit of a craw on and people who have been around from that time. That was a ruthless time. Many firms went under, right? Market was down 608 points by the close of business. And relative to a Dow that was trading at a couple thousand points, not 46,000, that was a massive sell-off, okay? So October has that kind of seasonality. Depending on the economic data that comes in over the next few days or what happens with the government shutdown, we may get another interest rate cut in October. Otherwise, we'll probably get one in November, one in December, 225s, maybe a 50. We'll see what happens. We should close out the year having cut at least 75 basis points, if not 100. And these, why are these good things? Look, at the end of the day, higher interest rates for longer doesn't benefit anybody, okay? Obviously, if you start to open up the money flow by lowering rates, it's going to help housing. Let me see, 6-7P. Let me just see what the comments are here. ES, great couple of days. Good. We bounced. ES is doing new futures course coming shortly. Yes, that's David. Hey, sounds good. Scotty, what's up? Okay. So I lost my train of thought. Anyway, so we are, we closed out Q3. We did really well. We're in the beginning of Q4. We're hopefully okay, that's what I was talking about, interest rate cuts. So higher interest rates for longer, it doesn't do anybody any good. If we open up the flow of money by lowering interest rates, it's going to jumpstart the housing market. You jumpstart the housing market, it's going to impact absolutely everything. It impacts employment, it impacts building, it impacts lumber, it impacts absolutely. Think about how powerful the housing is. Housing starts, resale of old houses, people having to build houses. The same thing when we talk about that Apple and Meta and Microsoft, all these guys, these major firms, Oracle, are putting hundreds of billions of dollars, not millions, billions of dollars into CapEx spending within the AI space. They're all going to have to build data centers for this world to keep up with where AI is going, like NVIDIA and all of these companies in the AI space. They're going to start to have to build massive data centers. In order to do that, they've got to start building them now. In order to do that, they got to borrow money to do that. And with the lower the interest rates, the easier it is to borrow that kind of money. So by lowering interest rates, it's going to really kind of jumpstart housing, AI, building of data centers, the whole economy, right? We've had interest rates high for a while now. It's time to start knocking it down. And it's not a political statement, it's an economic statement. Okay, we know that Jay Powell is on his way out. Probably, I guess his term ends in March, April. We know he held his ground against El Presidente for a reason. He did not cut rates before this. He did not feel that the economic data warranted it. Some people felt that he finally kowtowed to the pressure by the president. Everyone should understand that the Federal Reserve Bank and the President of the United States, there should be a Chinese wall between them. No disrespect to the Chinese. They're not supposed to really be communicating with each other and telling each other what to do. That's not the way things go. But I kind of think what happens right now is a little bit different. What time is it, baby? Okay, good. All right, we're good. I'm just pulling into the stock exchange here. So anyway, look, today, as David says, you guys are usually wrapped up by midday. Scotty, are you here? Can I pass it to you in a minute? I'm here. Okay, I got to hop out of this car and go live on FinTech. You want to grab the book? Can you open your mic?
I can open my mic from here and kind of kick us off.
Okay. All right. I got like 2 minutes left, and then I'll pass it to you. So, guys, you know what? Look, Dave is usually always here, and as he was from the car, I am as well. I got to hop into the stock exchange for a little bit. Scotty's going to take over. Market opens in a half an hour. It is looking a little bit higher, even in the eyes of a government shutdown. Baffling to me. But it's all good. Don't get yourself all jammed up. We've seen really good volume. David said you guys have had a really good week. We know that technicals are what governs the way we trade. Okay. You know, we think about this though, too. We have seen, so you guys, maybe some of you know this. One of the strategies I trade is called market on close. I sort of monitor the flow, the inflow of orders and notional dollar value into the markets, right, on a daily basis. The last 2 days, the last trading day of the last quarter, we had a $4.5 billion buy program that came in at 359.59, which is baffling. It normally would be for sale at the end of a really good quarter. It's being to buy. Yesterday, we also had a $4 billion buy program. So there is a lot of money on the sidelines being put into the market. Beginning of a new quarter, a lot of fresh cash coming in. Guys, I love you. Scotty, I'm passing it to you. And good luck, everybody. I'll hop back on as soon as I can.
I appreciate you, Peter.
Thanks, buddy. Good luck, everybody. Happy trading.
My man, have a great weekend.
Let me leave.